Hello, hello, hello. Just realised I was on the wrong little screen there. Hello, everybody. Welcome to today's live stream. It is the 11th of February. Hello, Bruce. Hope you're doing well. Nice to see you back on the stream. Yeah, it's been an interesting day so far, just looking over the markets. We've not seen too much in the way of movement. We had a little bit of pound strength going on early this morning. That's kind of faded a little bit. Saw a little bit of Swissy weakness, which is something that I am actively trading right now. I have literally just moved my stop losses up to lock in some profit. Looks like at the moment that is going to come back and take me out on my trailing stop loss at the moment. So I have to wait and see if that comes in or not. But we'll see how that one. You know, I was a little bit. I wanted to see if it would extend a little bit further. I mean, it's only dropped 7 pips on me, but the last hourly close, or the hourly close that we've just had, isn't looking great for the trade. Essentially, looks like we're getting a little bit of a reversal kind of situation in there, but I'll keep an eye on it. You know, 5 minute is still technically bullish at the moment, and that's what this on an hourly chart. So I'm going to move it over to the screen over here, just so you can hear me a little bit better. But yeah, so I took a bit of a small sort of position on this as well, but let me just kind of show you what I'm looking at here on dollar Swiss at the moment. This is where my stop loss is right now. This is my entry down here, and basically just looking to see if this will drive up. I traded this on an hourly kind of breakout situation yesterday, which was this breakout of this trend line. And I was looking to see if this would kind of continue up into some resistance levels. If we look at the 4-hour chart, I was just looking to see if we could get this momentum to continue. I wanted a bit more of a deeper retracement, to be honest. I wanted to see it kind of pull back towards the 9070s, but didn't get that in the end. So I just thought, because I've took this on an hourly trade, I don't typically like to push my luck with hourly trades too much. So yeah, entry was here. Stop loss was just below the low. I've locked in over a 1-to-1. I think it's a 1.4 R on this by putting my stop loss just below that last hourly candlestick. This was the level I thought about taking profit at, because my take profit is only slightly above that level. So I was thinking about taking profits at that point, but I thought, you know what, I'll let it go. Let's see if it can break through coming into the US session in half an hour or so. So we'll see how it goes. I mean, looking at the 5 minute structure here, it's still technically bullish. I think, you know, if it breaks that low, closes below, then we're probably going to see a deeper retracement anyway. So I'm not going to be involved with it. If we push back up to this high, I'll see if we get any kind of rejection at that high. You know, if we can, you know, if we fail to kind of make a new higher high or something, I'll probably just close out at that point. But at the moment, it's looking more likely that that is going to be stopped out on my trailing stop loss there. So I'll just move that back over to the other screen. Hello, Ryguy. Hope you're doing well. Or should I say good afternoon? It is good afternoon for me. It's 2 p.m. for me right now. So yeah, good afternoon. Sadhu, hello, welcome. Let me know what you guys are up to today. So typically what I go through in these live streams is just how I'm seeing the market. We have a little look at the fundamentals in play for the week. We have a little look at the strength and weakness. And we also have a look at the commitment of trader reports. And we try and build sort of a bias in the markets using these 3 tools, essentially. So one thing that we can look at going into this week, we've had some data out already, but there wasn't anything that was too kind of surprising. Last week, we had a really interesting set of data come out. It was the obviously NFP was the data last week, and it was a good jobs report in all things. If you look at it from a US dollar point of view, it was a good report. report. You know, you had the average hourly earnings coming in at 0.5, so that beat expectations, right? So that was good. Revisions here, revised to 307. That's a good thing. Obviously, the actual number that came out arguably wasn't that good. It was down from 169 to 143. Unemployment rate came down to 4.0%. So again, beat expectations. So I feel like, you know, that was a pretty good jobs report in the US. One thing that kind of shook the markets though on Friday and coming into that kind of Friday close was this consumer sentiment and inflation expectations. So basically what we had was consumer sentiment down to 67.8, which is a negative, and previously down to 71.1. So that's a bit of a negative. That's basically saying that consumers are, you know, not very sort of happy, essentially. Don't think that the economy is going to do great this year. Then they look at inflation expectations from the consumer, and they are predicting that, you know, prices are going to be higher. So they're looking at 4.3%, which is quite a big change from 3.3%. So yes, very interesting data that's come out of the market last week, which kind of shocked the markets going forward. So yeah, interesting to see that kind of play out there. Going on to what's coming up to this week. Good afternoon, Vincent. Hope you're doing well. This week is an interesting week as well. We've got some speeches coming up. It's not as aggressive or heavy. Let me just go to this week here. Just going to filter out yellow folder news for now. Got a few Federal Chairman Powell speeches. We've got one today coming up very, very shortly at 3 p.m. We've got President Trump speaking. Don't know when that is going to be, but I'm sure we'll get an announcement out of President Trump anyway. That seems to be the going thing these days. But really speaking, inflation data. Inflation data tomorrow is going to be very, very important, considering how the market reacted to the prelim inflation expectations on Friday. So this report's going to be a big one. I think if we obviously see that kind of miss to the upside, especially on core, we start to see core CPI miss to the upside. That's going to be detrimental to how the Federal Reserve goes about doing business in the future. So that could potentially put a hold on anything to do with cutting interest rates. So that's going to be a big one. CPI, I'm expecting to probably come off anyway. You can see that it's, you know, previous was 0.4, but the forecasts are 0.3. We know that oil is a big factor when it comes to CPI. So if we just type in US, we come to the economy area on your trading view chart, and we can come down to the inflation rate, right? So this is our inflation rate up at 2.9%. And if we go to plus here and just go to crude oil, I'm just going to put that on a new price scale there. You can see that these, you know, are pretty much hand in hand. When you see that oil is dropping to the downside, you get a decrease in your CPI. Okay, so I'm expecting some downside in the CPI figures, but it's core CPI, the one that is without energy, is without food prices, that we've really got to keep our eyes on when it comes to the report coming up. So yeah, just keep your eye on that one on Wednesday. Then we have some inflation expectations out of New Zealand. That could be quite interesting to look out for. GDP in the UK, this is going to be a big story for the UK. We've already talked about how growth in the UK has been slashed in half by the Bank of England. So there could be a real good kind of point here that we're not going to see much in the way of growth in the future for the UK. So I would say if we saw any kind of further downside in this GDP figure, then there's going to be a good point to see that kind of pound weakness continue in the market. We have Swiss CPI as well, expected to be 0.1%. And then we have core PPI on Thursday, which we can cover at some point. I might do an earlier stream on Thursday. Might do one at 1 o'clock. Maybe we can have a little look and talk about the core PPI and then see the actual reaction at the time of that coming out, because that could be quite fun to do. And then Friday, more sentiment data. We've got core retail sales. This is going to be the real trigger point for us. You know, if we start to see retail sales and core retail sales drop to the downside, that could be fairly negative for US dollar, because it's telling us what the sentiment in the US is. You know, are people spending money essentially? We shall see. Now it is obviously January's data. So, you know, if we look at sort of January there, it'll be February's data, sorry, or January's release, but it's released in February. So I expect a little bit of downside anyway, because it's, you know, after Christmas, people are more likely thinking about, you know, not really doing much with their capital. They're probably just thinking about saving a little bit more for the year ahead. So I don't see too much in the way of people spending too much. Afternoon, Bongo. Hope you're doing well. What are your top pairs of the week and the bias? Yes, we'll have a little look at that in a second. Right, guys, waiting for retracement on the yen to then sell it. I'm looking at pound yen, looking for a retracement on gold, and see if I can buy. Looking for a breakout long on CAD Swiss. Yeah, I like CAD Swiss, to be honest. I like anything Swiss downside at the moment. Let's go take a look at it then. So sort of top pairs that I'm looking at the moment. So just kind of looking at the currency strength meter. Euro was one of the worst performing currencies last week, and I can kind of see that. I don't mind looking to sell euro, but I'm only looking to do it against the US dollar, the Canadian dollar, and Japanese yen. Pound also came out of that sort of reversal zone down to 4, so a little -2 figure there. CAD was the surprising one for me, -7 to -1, so real strength in the CAD, some strength in the US dollar again, and then the Swiss franc was still weak, okay, and the Japanese yen still a strong currency. I like buying yen right now. I think for me, if we're going to look at sort of the currency pairs to look at, I went through them on the heat map then. I'm just going to zoom out a little bit. I went through them on the heat map and was like, okay, which markets are setting up for potential opportunities? So really speaking, euro dollar, I like to the downside. Pound US dollar, I like to the downside. My only problem with those pairs is that the commitment of trader reports are showing us that there is heavy selling, and that really puts me on edge when it comes to those kind of markets. Same with the New Zealand dollar. You know, and CAD's, you know, CAD, Kiwi, pound, euro all have bullish COT signals, so it's very difficult to want to try and sort of buy them, sell them against the dollar at the moment. So I'm kind of struggling with those ones, but there is some value to be had elsewhere. CAD Swiss, you know, I like the idea of potentially being a buyer of CAD Swiss. I did say that though, there's no real trend on CAD Swiss, so it makes sense that you're looking for a breakout long there, right, guy, because that market is in a range. I like Euro Yen a lot. Euro Yen and Euro CAD, I really like the look of. So let's dive into a few of them and let's get into it, and then we can have a little look at the commitment of trader reports after. So let's have a look at the Euro pairs. So I'm going to take a look at Euro CAD first. So the way I like to look at these markets, let me just put the 50 moving average on there, is I like to look at the conditions surrounding it. So my bias is to the downside on this market because euro is a weak currency, okay? So euro equals weak and CAD equals strong. So I want to be a seller of euro CAD to the downside. Now, when I look at the technicals, then I like to say to myself, okay, what condition is this market in? Now, on a weekly chart, it's very mixed, okay? You know, we've got this kind of very gradual upward trend being built. I can see that we had some resistance up towards this kind of 151 and above, and I can see that prior to last week we had a rejection of that. Last week, we saw a very aggressive sell-off on EuroCAD, which is obviously prompting me to have a little look at some downside. Now, when I'm looking at this weekly chart, there are a couple of areas that I thought to myself, well, where could demand be found? Well, you've got this zone in here where price is kind of at right now, and you've got this area down in here. So those 2 points for me would be good areas to target for sells, right? So let's go take a look at this in a little bit more detail. Let's go to the daily chart, okay? And I can kind of refine this a little bit. So this one down here doesn't need refining too much, but what I like to do is kind of open it down to the wicks, okay? Because this is where that real kind of turning point came in the market. So I want to know, do these sellers still exist at this point? Okay, if they do, or sorry, these buyers, sorry. If they do at this support, then we should see a rebound. But if they don't, price might trade through it and continue down to the next level of support. So I'm looking at a potential move where we can see price kind of come through into this level and then potentially break down and continue lower. From a fundamental perspective, you know, CAD's had a little bit of a boost, obviously because Trump has paused tariffs, but now he's announcing European tariffs. So euro could be impacted by that. Arguably, Swiss franc could gain a little bit of strength from it. So although I do like dollar Swiss long, and I am currently long still, there is a chance that the price reverses, because the Swiss franc, whenever the euro does pretty bad, the Swiss franc can kind of, you know, be used as that European safe haven. But essentially, EuroCAD, I like to the downside. At the moment, you know, we're trending down. There's nothing for me to really do here right now. I quite like the fact that we've, you know, aggressively moved, consolidated, aggressively moved. You know, is this just another consolidation for then a move down? So two things we can try and do. The first is to see if we start to see a pullback. Okay, so if we start to kind of pull back in this area here, this would be ideal, because you've got that kind of secondary phase in the market. It would be an upward trend on the 4-hour chart. We could draw like a trend line or something, or look for a breakout of the 4-hour trend or the hourly trend, and then look to get short with a good risk reward, right? Because when I bring up the risk reward calculator, let's say a short now, okay? And I have to target this area really, just to be safe, So the market can't really go target beyond support, because you don't know if price is going to breach support. But let's give it the benefit of the doubt. There's a psychological level here at 147. So let's say our target needs to be 147.10 on any kind of short, right? Where's my safe stop loss? Now, at the moment, I would say the safe stop loss is up here, above 149, because you've got the 50 moving average, and you've also got this area of previous consolidation. So that is an area where obviously the market has paused. Buyers tried to come in, they failed, sellers took over. So our seller's going to be active here. And that is probably the best place to try and do business with this market, because if I push higher, you know, our risk reward ratio goes up, right? So that's what I would prefer to look for there when it comes to an opportunity. So I always say to myself, what's the ideal? You know, what is the ideal position to go and get? So anywhere in that zone, I feel would be ideal for me to do business with this market, to try and get a good reward to risk trade. The second option is we go lower, okay? Now, in theory, if the market is going to continue lower, the market shouldn't really make new highs, okay? It shouldn't necessarily, you know, break into new highs immediately. If the pressure's still kind of remaining there, if we don't get that secondary phase. So, you know, when I look at what's happening in the market right now, I can see that the market has formed a high here. We have rejected it. If I go lower to an hourly chart, you can see that there's this kind of minor upward trend being built, but this really was an area where sellers came into the market. If I look to a 30-minute time frame, you know, you can see that this is still technically to the upside. 15-minute is showing some breaking trend. You've got that kind of consolidation there. Markets broke out of it. But for me, when you start going down to these time frames, you run the risk of, the risk is higher essentially. The one thing that I would probably do in this situation is either trade it at a lower risk, okay? Because if my stop loss is going to come in here, yes, I have a good risk reward ratio again, but my stop loss is in a very vulnerable place. So I would be risking like 0.25, maybe even 0.5 maximum on a 15-minute short here. But we'll wait and see. At the moment, I don't see the trade just yet. I do like the idea of being short this market. It's one of the top markets to short right now. But I don't feel like I want to get involved here. I want to try and see if we can push back up towards this kind of zone up there, which will give me a greater opportunity. But we'll see what happens. You've also got to be aware of spreads and charges, and things like that anyway. But the spreads on cross pairs can open a fair bit on the evening close. So that's why I want to be looking at potentially getting short up towards this level instead. Take it on a bit more of a swing trading perspective. Question, where can I get that currency strength meter? At the moment, nowhere. It's just my own personal one that I just show on the channel. I do have videos on the channel to show you how to make your own though. So I feel like I should just have links to these all the time, because I guess it would be helpful. Let me try and see if I can grab it. I'll just search for it on another tab. Search across channel, currency strength meter. It's not there. One second, let me see if I can get this. I've got to do it by views. Right, let me share this. So I'll show you how to make your own version of this there, but I update it every Sunday, and I've been updating it for the past 4 or 5 years now, every weekend. Oh, fan, welcome. I'm also looking at exactly these two markets, gold and CAD Swiss alongside. Looks good on the hourly. Let's go check out CAD Swiss then. We are starting to see that little bit of a breakout, but this is what I was talking about when I was talking about the Forex heat map. We've got this sort of range that's being developed here on CAD Swiss. Say kind of your highs are up here towards that kind of 64 handle, and then I'll kind of ignore that low there because that seems to have been ignored by the market, and you got this kind of 62 level. So CAD Swiss right now is in a developing range. Do I like upside in this market? Yes, but I would just say we are at a level of resistance on the daily chart, and yeah, that means that for me, again, where do you find value in sort of risk reward in that sense? So I would like to see price close personally. Obviously, you guys, do what you want to do and trade your own plans. I think if we get a good close out of this level, then we could maybe see price go and try and target 66s, maybe even 67. So that would be more interesting as well, because that will give us a lot of time to try and do business with the market when it comes to this currency pair. So let me just flick back to currency strength meter. Yeah, so you can see I've just kind of put it as neutral. When I looked at the daily trend and the daily phase, I just put it on neutral because it just didn't make sense to me right now. Euro yen I really like as well. Euro yen has a pullback forming too. So we've come into this area of demand now. I'm just going to remove all this drawing and redraw draw some stuff because charts are looking a little messy at the minute for my liking. But yeah, essentially this is the sort of demand zone on euro yen, this kind of 155 handle. So we are starting to see buyers come back in at this point, which is fine. You know, markets don't just move in a straight line. And this is something that we want to see because it gives us an opportunity to potentially trade it. So at the moment, I want to see a continuation of this pullback, and then I'll come and target these lows again, this kind of 155. But because we're starting to kind of create that secondary phase in the market, we should start to see a higher high, higher low pattern develop. Probably won't see it on the 4-hour just yet, although tell a lie, we are starting to see that. You can see that the market is breaking into new highs on the 4-hour chart. Perfect, because we can then start drawing kind of breakout opportunities from lows. And this gives us an opportunity. Just watch the highs. You know, if the market starts failing at those highs, then there's a good chance that we're probably going to see the sort of continuation of a downward trend. But yeah, the market at the moment could continue higher. That's great. When that starts to change, that momentum starts to change, that's when we'll start getting involved back with an opportunity here. And just to kind of prove my point and why I kind of look at the market in this way, we'll just go to the daily chart. This was the secondary phase here. Arguably a bit of a secondary phase, bit of a long-winded secondary phase there before seeing that downside. And if you go to your 4-hour chart, here you see quite a clear upward trend, okay? When that gets broken, the market enters that primary phase again and it continues to the downside. Here you get this kind of double bottom, you get a higher low. Once that's broken, market, you know, extends to the downside. So yes, we're starting to see that kind of play out now. But I want to see, again, just can we get another higher high, higher low? Can it break? Can we then look for a move down into kind of 155? If we push our luck down into 154s. Now, currency strength for me is great because it's basically telling us that, you know, it's a chart to watch, you know, for a potential downside. From a fundamental perspective as well, this is pretty good. You know, although we're starting to see a lot of talk about Europe going to invest again and stuff like that, the chance of Trump putting tariffs on Europe is fairly high. You know, comparing with places like China and stuff, yes, he's going to tariff China, but you know, he kind of needs China. Does he need Europe? He needs Europe for sort of automobiles and things like that. A lot of US people, you know, buy German cars, for instance. But you know, it'll be interesting to see, you know, if he does tariff those places fairly aggressively. Maybe he's going to help out his buddy Elon by doing that as well. Just keeping my eye on the dollar Swiss trade that I'm in at the moment, because I put my stop loss underneath these swing lows here. So my entry was down here, just above the 91 handle. My stop loss is in profit now, just locked in there. Looking to see if we can try and kind of climb those highs again, and you know, if we can, that'll be fantastic. If not, I'll be knocked out for small profit. But we'll see. We'll see. At the moment, it's looking like it could be a reversal setup right now. I'm going to add a little alert on that high. But dollar Swiss was high on my radar for a continuation this week. If we look at dollar Swiss, price is still technically bullish here. What I noticed was, you know, after I was long last week, just realized that currency strength meter video is playing in the background, was long down in here, took profits at these highs, didn't get the long here, kind of bottled it for a bit of a long there. But what I saw was the fact that we were getting that pullback. Okay, so sorry, let me just go because it will make more sense. When you look at the 4-hour chart, you can see that the market is in that kind of bullish phase. We're getting that primary phase, secondary phase, primary phase, secondary phase, in that primary phase now. So what I wanted to try and do was look at a potential setup as price was kind of breaking out of that secondary phase going into the primary phase. So when you go to a 30-minute time frame, you can see that the market started to make a low and then we had a lower high. Okay, so all I did was I just drew a trend line. So this gave me the confirmation, that break there, but I went into it a little bit earlier than that. So basically had this break, I ended up buying this close and the market has rallied ever since. But basically in long here, stop loss was tucked in underneath that swing low there. Let me just go to the hourly chart. And then now that's where my stop loss is. So I've locked in a 1.4R at the moment, seeing if we can continue up. There are a couple of factors that could prevent me from reaching that target. Number one, this support here, or this resistance. So around about 91.40 was where we've kind of rejected. But I'm looking to see if we can trade a little bit higher. When I look at the daily chart, this was where we got to, where the market kind of gapped and opened before we ran up and then moved down to close here. So I want to see if we can try and reclaim that open price. So that's what I'm trying to aim for at the moment, which is around about that 91.50 level. So we'll see if that can continue higher. Like I said, I've locked in 1.4R anyway. So that's a good sort of return on an hourly chart move, I feel, with a safe stop, breakout entry in line with trend. So I'll see if we can get that. If not, I'll be happy with 1.4. I think that's okay for a move. Would you buy pound Oz, pound Kiwi? So yeah, last week I liked the idea of buying those markets. Currency strength meter was suggesting that we did that. If I just go over to the strength meter here, which I haven't updated, I don't think, for this week. No, I need to do that. I updated it for the last 2 weeks there. I need to do 2 weeks of data there. Slacking on that one. But it kind of shows us that 2 weeks ago, it could have been a good trade, right? Kiwi, which is the yellow line, was moving higher. Aussie, which was the grey line, was also punching higher as well. So I felt like there was a good opportunity. Pound at the time, which is orange, was a little bit lower than them, but pound dropped a little bit last week. So I did like the idea of being long pound Aussie and pound Kiwi, but I don't like them now. Commitment of traders as well was pointing to a potential opportunity here as well. If we just go flick over to the commitment of trader reports, we had the net change sort of long, pound was getting a little bit more bullish after being very, very bearish, right? If we go have a little look at sort of that 52-week range, hedge funds are very aggressively selling pound, but it reached a level of extreme for me. And I wanted to see if pound would kind of recover from that. The news has kind of prevented it from doing that at the moment. When you look at the Australian dollar, it's not being sold as aggressively. It's being sold, but it's not being sold as aggressively as pound. So that made me think there was probably more room to go for hedge funds to sell the pound. When you look at the net positions, we're at minus 11,000, minus 75,000. So we can see clearly hedge funds are selling Australian dollar more than they are the Great British Pound. So that's why I quite liked the idea of being a buyer of this market. At the moment, though, it's not looking like we're going to get that move. Now, let me just clear these off. Just looking at it from this standpoint, this is a great area, right? Because in consolidations, this is where volume gets built, okay? This is buyers and sellers agreeing with price, okay? Buyers won and the market rallied to the upside. So if there was going to be an area that I did buy from, not confident being a buyer of this market now, but if it was going to be this point, it would be around here because there was this volume being built up. Buyers won that. We've come all the way back into it. We're retesting it. Looking at the 4-hour chart, we're still very heavy to the downside. You know, although we're seeing a very nice bullish candle there, very aggressive buyers coming in here. I think the only way I would buy this now is if we had some real significant kind of change in environment, you know, some kind of break of some CTL, which we're fairly close to. I think the last 4-hour high, though, if we ignore that kind of gap candle there, it was around here. So it needs to do a little bit more work for me in order to be a confident buyer of pound Aussie. And look, the commitment of trader reports are still showing, you know, very heavy selling on pound, but they are starting to change their opinion slightly. I'm just worried that the growth catalyst in the UK is going to be something that really just drives home that, you know, look at British pound net change plus 10,000, right? So they are essentially they're adding to long positions. If you look at the change in short positions, okay, you can see that they've added a little bit to their short positions, but on a net change, you know, that's like plus 4,000. So they are starting to add some kind of longs in there. When you look at it from the Australian dollar point of view, they are decreasing their long positions. Okay, so you can see long positions, short positions here. Okay, so that is the net change. Short positions, they have 110,000 at the moment. Okay, which was an extra 3,000 positions. So I think the market is selling Australian dollars right now. That's probably due to the fact that we've got the situation in China. So, you know, potentially there is an opportunity here. I just don't know if it's against the pound right now. Let's have a quick look at how the commitment trader report is shaping up. Decent buying coming in here from commercials. They haven't reached necessarily an extreme yet. You know, when we look at this back in April of 2024, you know, that was kind of a good area. Look, if we look left at that point, around about that 119,000 contracts, that was where we started to see a good bottom out in the Aussie dollar price, and we saw price move to the upside. Price is a lot lower than that now. Again, we're kind of looking at that sort of 2022 low, very similar to the New Zealand US dollar. You know, and we're starting to see some kind of buying coming back in here. Hedge funds, again, they're not really selling at extremes. You know, this would be my extreme here, I would say. That would be why I'd be buying that. So we're not really at, you know, if we look at it from a point of, okay, a 6-month extreme, yes. 18 months, no. So we could see a short-term reversal and a continuation still. But I think the China play is going to be a big play here. China is going to be a big decision in what happens coming up. And that's very difficult to try and trade right now. Same with pound Kiwi, really. I was looking at this market earlier, and I kind of liked what was being sort of built here. This kind of pattern, a rejection of this zone, this kind of supply zone up here, up towards that kind of 2.2. This is a market that I really wanted to sell down here, and I did sell it. I got stopped out for a small loss. Small loss? No, it was a full loss. I got stopped out for a full loss here because I was looking to try and trade this breakout situation in here. And I ended up going short around this level, I think it was, around sort of 22.1765. Put my stop losses above these highs, got taken out. So I did like downside on pound Kiwi because of the commitment of trader reports, but I just, at the moment, they're kind of all singing off the same hymn sheet right now. When you kind of look at any kind of divergence between the commitment of trader reports, whoops, just punched my mic. I'm looking at it as you know, where is the real difference? Now, look at the Japanese yen. Okay, Japanese yen net change in long positions plus 19,727. So they are increasing their long positions on the Japanese yen. So that is a market which I like the look of. And when you kind of compare it to other markets, you know, where you've got sort of CAD, you know, selling CAD, euro they're buying into a little bit, plus 7,990 contracts. Aussie, you know, so things like Aussie yen to the downside makes sense for me. CAD yen potentially, things like that, when you're looking at it from a commitment of trader point of view. I like it to the downside. Okay, so I just kind of, I think I covered that, Irfan, sorry. Let me know if I did. I'm gonna look at pound Oz. Was it pound Oz? GA, yeah, 196 level. I mean, it looks good at 196. It's just we're in that consolidation now. Hello, Ibrahim, welcome. I bought euro pound and I think it's so slow. You bought euro pound, okay. I guess the question I always like to ask people is why? Why did you buy euro pound? Looking from my perspective, I like the idea of pound weakness, okay. I like that. Although there's a couple of factors that goes against it. Fundamentally, I'd say it's weak because of growth forecasts and things like that. I think the Bank of England are going to have to start cutting interest rates a little bit more aggressively than other central banks. So that's why I think pound could be weak. But I also think euro still remains weak because the factor is that Trump is going to sort of tariff. So this market could just do what it usually does and just sort of ranges right now. On a buy side opportunity, you know, I saw a potential down here for that's kind of a good supply zone. That would have been a nice bounce to try and trade higher. But other than that, I don't see the long on this market in particular. Remember, always think about the WCS method. Have this in the back of your head every single time. Why do you want to be in a market? Okay, are the conditions there that matches your why, and can you trade a strategy that is consistent to try and profit from it? That's what I like to do. Kiwi Swiss was on my radar a little while ago, you know, here when we had that initial breakout. Since it's kind of gone sideways, so I wouldn't mind a little breakout here on Kiwi Swiss. Swiss yen has probably been one of my best performing trades this year so far. Pretty much shorted every pullback on this one, and I think that this is a good market to continue lower. You know, if we look at it from a weekly perspective, yes, we're at this kind of demand point, but I like the fact that we kind of broke out of this ascending triangle, looking for a little bit of downside into these kind of levels, 163s. You know, look, we've broken that weekly 50 moving average as well now. So there could be, you know, last time we kind of did that around these areas, we did extend a little bit lower. So I like the idea of selling this market. I think this is a market that I just think every pullback, I'm going to have a little try and bite at it, see if it does continue down. Daily chart at the moment is just stuck. We're not really doing anything. I would like a pullback on this. I'd like to see another couple of days of pullback, really slow days, and then continuation to the downside. So I'm going to keep my eye on Swissy yen as well. What you make of the FTSE and the US stocks? They're just headed in one direction. I was waiting for some kind of pullback. Yeah, I mean, it's hard to ignore the fact that these markets just go up. There are moments where they don't. Obviously, that was the hiking cycle, and then obviously you had the COVID blip, and then you had 2015 sort of sideways market. I just think it's, when you look at sort of the things like take the S&P 500 at the moment, they're this market is basically being driven by 7 companies. Okay, so I think the concentration risk here is very, very high. You are basically, you need sort of like Nvidia, Alphabet, stocks like that to perform well consistently. Now, some of them are obviously like too big to fail, but they can still be very much overvalued when it comes to the stock market. And I think we've seen some jitters recently. Lots of selling coming in here, lots of selling. Tariffs have been pretty bad. But if we do see that calmness, and like I talked about before, when the VIX starts to come off these areas here, then there's a good chance that we see some upside to stock markets, right? So this could obviously have a big play this year, with the potential for this to continue higher. I do think that stocks will probably remain bullish, because in a Trump market they are typically bullish. I just think it might be a bit rocky. NASDAQ, what I liked the most was the Dow. The reason being is we go over to the futures market and have a little look at the Dow Jones. And I just want to apply the COT index. This one is in a bullish environment at the moment. So out of all of them, if you look at NASDAQ, it was in a bearish environment for a little bit. S&P 500 is in a bit of nowhere. Whereas if you look at the COT index on the Dow Jones, it's in a potential bullish period. And look at those pullbacks on the weeks. I would say that's still fairly bullish. So it's just looking to potentially get an entry into this, which at the moment is hard. I did look at a potential breakout of like something like this, a trend line, maybe a close back above the 4-hour 50 would be a good opportunity to start looking for some longs on the Dow. The Russell, not too bothered by, because I don't think tariffs will really benefit the Russell at the moment. But yeah, if you look at the FTSE usually has a good start to the year. And the FTSE has been performing pretty well of late, since we kind of got a breakout early Jan. Market has just continued to kind of trade higher here. So I think the FTSE will probably do okay this year. The FTSE won't necessarily be impacted by anything to do with kind of pound weakness, because we do a lot of the companies that are in the FTSE do a lot of selling to the US. So if the US performs pretty well, you'll probably see the FTSE perform well as well. So, I think this is kind of underlyingly showing you that there could be some good potential in the US still. Same with the DAX. They're not as, focused on just selling domestically. They're like internationally sell. So I think the FTSE will be okay. If you look at something like the FTSE 250, that would probably be down on potential tariff threats. So yeah, in that sense. What's your take on US dollar yen? We had a couple of US dollar yens actually from Jacob and Mac. Dollar yen, I still like dollar yen to the downside. This is something we spoke about a couple of weeks ago when price was at 155. I just think from a fundamental perspective, I think Japan's economy is in a good shape. I think that could help it perform better than the likes of the US dollar. Also, the yen has that kind of law to it when it comes to risk, and because of Trump and tariffs and sort of uncertainty that's around the whole market, I just think the Japanese yen will benefit from that, and it's something I like. So I think for me, I want to buy Japanese yen. It might not be the best place to do business with it, like selling dollar yen to the downside. That might not be the best place to do it, because if we see the dollar and the yen become kind of both bullish, they could just move sideways. But like I said, things like Aussie yen, I like to the downside. CAD yen potentially as well. Pound yen, yes, and Swiss yen is probably my main one. So I like to go and try and target that weakness or other economies. Oscar, pound US dollar, any possible quick short? I don't know. Depends what you mean by quick. You are coming up into a supply zone here, but you need some kind of, change of trend in order to be short. So for now, no, I don't see that happening just yet. Right, guy, it helps that Trump and Japanese PM seem to get along well. Yeah, potentially. That could change. That could change because we just don't know with the Trump administration. But potentially that is another factor that comes into it. His relationships with other international central banks and international PMs, presidents, could have a big factor on how tariffs get put into place on those areas. UK seems to have sidestepped a couple of things right now because it seems like the UK government is just appeasing Trump right now. So, maybe the UK will get a little bit of a boost from that. But yeah, let's go take a look at some other commodities then. So, gold is obviously performing pretty well. $3,000 is looking like it's on the horizon. So I know a couple of you are looking at potential pullbacks in the gold market. Yeah, looks pretty good to me. As long as we stay above this kind of 50 MA, as long as we continue to make higher highs and higher lows, I don't see any kind of huge downside yet for gold prices. Even when we take a look at the commitment of trade reports and we have a look at gold, they are selling, but it's not really at major extremes, so commercials are buying, but you want it to be like back in 2020, back in 2016. You want it to be those kind of levels, and we're not quite there yet. So I think $3,000 is a huge psychological level, probably be the level that gets tested. So yeah, we'll see on that one. Byproducts of that, I did like silver upside. I've been kind of buying silver on pullbacks recently. Looking at the daily chart right now, rejecting these previous highs again at that sort of 31.70. So keeping my eye on silver right now. I did try and buy it here. I had an entry on the hourly chart above these highs to see if it would kind of push higher, and it didn't trigger, and the market has continued to sort of pull back. So we are starting to see some good buying coming in here now, around about that 31.40, 31.20. Very strong buying coming in here on silver. So I feel like silver will feel the benefit of potential upside. So I'm going to be watching this one. Hopefully we get a nice daily close back above these highs, above these lows, and that'll be a good sign of potential upside. I think, targeting up towards sort of 33.40s and then maybe back up towards the $35 areas would be quite nice. So definitely keeping an eye on silver. Oil has broken out as well out of this little area here, which is again something I'm going to be keeping an eye out. Is this going to be a change of this weekly narrative? Very much heavy volumes being built down towards this kind of $70 area. Market has broken out of that now. Is this going to be a point of potential reversal? If I just go to the futures chart and we have a look at some volume, just go to a daily chart. See if we get some volume being printed. Yeah, this was all that value area. of this whole chunk, this consolidation. This is why I always say, look at the consolidation in the market. That's where volume is being built. So we've come into that volume, we've rejected that volume. Market is closed outside of that volume. So there could be a good chance that price starts moving higher again. Now, we did get a couple of reports. OPEC have talked about, cutting supply. So that could be, increasing supply. So that would be downside for oil. Obviously, Trump wants to American producers to produce more. So that would be also bearish for the price. But those incentives won't come in yet. They won't come in just yet. So I think that we could see some fluctuation to the upside here. Natural gas as well, starting to push a little bit higher. There's actually a good sell signal on the commitment to trader reports for this at the moment, but it's not something I'm actively trading right now. Copper as well. This is an interesting chart. So usually when China does good, or there is some hope in China, copper prices tend to move higher. And we've just broken this weekly sort of resistance level. So you can see this is quite a clear trend line where you've got anchor, formation, test. Price has breached that now. So, is this a sign that we are going to start to see some good sort of, opening up in China, manufacturing, or is this just a sign that the fact that there's tariffs being put on metals right now and that it could potentially crush the sort of demand or the supply, at least for now, which is going to drive up a little bit of a international demand for commodities. So it's just something to ponder, something to think about. I was taking a look at coffee futures as well. I mean, coffee futures, ridiculous levels. People talk about sort of Bitcoin and things like that, but if you had bought coffee futures sort of at the low of 2024, that's 144% return on your investment. That is a ridiculous return on just one asset. When you look outside of like cryptos and the volatility that goes with cryptos, which at the moment is just going sideways. I find that quite fascinating to have a little look at. Right then, guys, going for nearly an hour. I like to run these for just about an hour or so. Just a kind of quick update. Dollar Swiss is still like to the upside, starting to see a little bit of push up high now. See if we can try and break through those highs. If we do, that's great. Happy days. I'll keep it on. I'll see how it closes. Corn, yeah, corn did pretty well as well, didn't it? And orange juice recently. Let me look at the futures. Where's my grains? There's wheat, soybeans, OJ. OJ's starting to come back now. I haven't looked at OJ in a minute, but look at that move from 2021. Corn, cocoa. Where's my corn chart? That's cotton. Oh, I don't know where it is. Don't know where it is. I mean, look at that. Look at that on the corn. I mean, commercials are selling this, pretty aggressively right now. Fairly similar to these kind of levels back in 22. Hedge funds buying it pretty much near those levels of 2022 as well. 149s as well. That's a decent level when you look at the chart. So yeah, man, there might be something in that. Right, guys. So keep an eye on your corn chart. Right, guys, I'm going to leave it there. Thank you for everybody that joined me. I might do like the Thursday live stream a little bit earlier. I might go at 1 o'clock just so that we can look at the reaction to this PPI data and the unemployment claims, because I think that's going to be a big one. Tomorrow, big news. You know, CPI coming out. Keep an eye on your core CPI. So, yeah, thanks for watching, guys. I appreciate you all for coming. Thanks for the questions. If you enjoyed it and you learned something new, hit that like button. Subscribe if you are new to the channel as well. I appreciate that. And I will catch you all very, very soon. Cheers, guys. Thank you.